Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Job with Jared. Happy Friday, everybody. Hope everyone's doing fantastic. Welcome to November. Here we are towards the very last push of the year. Hope everyone had a wonderful Halloween. But here we are in November, just getting ready to start the holiday season. And the markets finished the week positive, at least in terms of interest rates. So there's a little holiday cheer going on. Finally, things have reversed itself. Interest rates have been under a whole lot of pressure and broken through to the negative side, some important technical levels, which began to reverse itself this week, which I'll get to here in a second. But we had a ton of information, just a smorgasbord of information that was released into the market for the markets to digest. We saw the Federal Reserve meeting. We saw the announcement of a new Fed chair. We saw, stock market continuing to be at all-time high levels. We saw the introduction of the tax reform bill. We had some information here on housing, and we did also have the jobs report. So just a lot of info into the market. First, let's start with the Fed. The Federal Reserve did have their meeting. No surprises there. They did not increase interest rates. There was no press conference afterwards. That's going to be in December. There was a release, though, of some a statement, that was just released into the market. The market did want to analyze that to see if there's going to be any telegraphing of what's going to happen in December. Can most expect for the Federal Reserve, or say that there's a high likelihood that they'll increase credit. No real surprises there, nothing really to telegraph things. One, little thing, they did say that the economy was doing strong. They used the word strong, and words are important. So that's a bit of an upgrade to what was the statement last month, or last meeting. So that just further increases the chances of maybe the Federal Reserve will increase credit. But the president did announce that there's going to be a new Fed chair, Jerome Powell. And so that kind of throws things off a little bit, because with the new Fed chair, will Janet Yellen kind of defer to what Jerome Powell would like to do? We'll see, but he's very, very similar to Janet Yellen. He is a dove, doesn't want to do things too dramatic, so won't have a real quick trigger finger here to increase rates. But again, it's been anticipated the Fed's plan is to increase credit in December, so we'll see what happens with that. The Case-Shiller Index came out, and that was for August, so it's a bit of a lagging indicator. It did show that the national appreciation rate increased. The pace increased slightly. It went from 5.9 to 6.1. Here specifically in Denver, we saw an increase of the year-over-year number, showed 7.3 appreciation rate, 7.2. And the month-over-month number showed only a 0.3% increase, showing that maybe while the appreciation rates are still tremendously strong, still fantastic, we're now one of the top, or still, amongst the top four, but maybe the pace of appreciation is moderating a little bit here in Denver, which is a good thing. Again, 7.2 is phenomenal growth. 0.3% on a month-over-month number, if you were to annualize that, that's only an increase of 3.6, which is still awesome, still an increase. And it's normal that around this time of year, maybe appreciation rates maybe moderate a little bit, but we'll see if that is a trend. We also saw the jobs report number that came in today, and expectations were for over 300,000 increase to jobs. Expectations were about 301 to 325. I'd seen, different numbers. The actual number came in showing the increase of jobs only at 261,000. So a bit of a miss. And last month's number was horrific. That was really low. But there were some revisions to the high side, higher revisions on the previous month's numbers. So that kind of cushioned the blow. And the reality is that the market just shrugged off this number anyway, just because there's just a lot of fuzz in essence over all the these numbers, because with all the natural disasters and with the hurricanes, that's going to just skew these numbers. So people are not putting a whole lot of importance on these numbers because they're just going to be skewed. The unemployment rate, though, that was a bit of a surprise. Expectations were for the unemployment rate to stay at 4.2%. The unemployment rate actually dropped from 4.2 down to 4.1. So, real low numbers, but that's because a whole lot of people just left the workforce. The birth death ratio was off a little bit. So that caused that unemployment rate to go down. There was not very much inflation pressures here with the employment cost index and the average hourly earnings was lower than expected. So there's not a lot of wage pressure here, which is good news on the inflation front. So the bottom line is interest rates just did great. So that's good news. We'll keep you informed because there's a lot of things going on, a lot of stuff going to be happening here with the whole tax reform bill. So we'll keep you informed with that. Some stuff that can affect our market. But bottom line, interest rates finished the week much better, and we did breach to the positive side the 200-day moving average in terms of mortgage-backed securities, which is an important level. So we've been positive from that over the last 4 days. So hopefully that's going to continue to hold. We'll keep you informed if you're working this weekend. So are we. If you have any questions, give me a call. Great time for, like I said last week, for clients to take advantage of these low interest rates. Thanks for joining me with Job with Jared, and we'll talk to you soon. Bye-bye.